How does crypto fit into a coordinated retirement tax and estate strategy? Find out more in today's episode.
Welcome to a Wiser Retirement Podcast, where we cut through the noise and bring you real, honest conversations about investing, retirement, and building lasting wealth. No sales pitches, no gimmicks, just everything your financial advisor won't tell you.
Welcome to a Wiser Retirement Podcast. I'm Casey Smith. Today I'm joined by Robert Shorthout, founder of Teton Crypto Capital. Hey, Robert.
How's it going?
Robert is repping his Berry College pullover today.
Yeah, it's the Atlanta folks will understand. It's cold in the mornings right now, and by lunchtime I'll want a B t-shirt. So yeah.
Robert and I are both graduates of Berry College.
Yep.
Rome, Georgia, 24,000 acres, 27,000 acres of land.
Mm-hmm.
And about 1,900 students.
2,300 students.
Oh, wow.
Now. And
is that the largest ever?
It is at the max. Yeah. I think it's like 2,400 with graduate students and, probably about 10,000 deer.
Where are they all living?
Beds on campus is always the challenge.
Yeah, I'm sure.
Yeah.
Yes. And there are way more deer than there are students.
Yes.
So
absolutely.
But if you ever have a chance, if you're in Rome, Georgia, go by the campus and get a tour. Tell them Robert Shorthout. They'll let you right in.
Yeah. Yeah. And if you like hiking, there's like miles and miles and miles of trails.
Oh, that's
so,
true.
That's people tend to love to do. So
mountain bike.
Anything outdoors.
Anything outdoors, yeah. All right, well, let's get started. Today, we're going to focus on Teton Crypto Capital's ideas of investing in crypto.
Yeah, I feel like I should be asking you the questions on this one.
All right, so let's talk. Crypto is so new still to so many people.
Yes.
I feel like we should be doing Crypto 101 still. I remember when ETFs got launched, and 10 years into it, people were still flooding the ETF 101 class at the conferences. And I was like, what is wrong with you people? That was 10 years ago.
Right.
But I feel like crypto is going to be the same way. 10 years from now, people are going to be like, maybe I should be looking into this. And Bitcoin's going to be at $1 million. And,
in theory.
Like, where were you?
Yeah. I mean, anything new. The same thing with the internet. People didn't understand what we would use it for. Now it's everywhere. It's just kind of a similar growth trajectory curve.
So when you think about crypto in someone's investing, you think about accumulation phase. So you're building assets. A lot of people that are buying crypto, I would argue, are in their accumulation phase of building wealth.
Mm-hmm.
And then you have the distribution phase, which is where you're now living off your portfolio. So you're living off your investments.
The retired word.
Yep.
Yeah.
So crypto still would be a part of that.
Yes, could be.
Probably the more growth engine, it doesn't pay dividends, right? So you're not collecting an income from it. And then there's the legacy portion of, you pass it to the next generation.
Mm-hmm.
So today, that's kind of the framework that I want to open this in, that we talk about through retirement and how crypto plays a role. So when we start with like a high net worth retirement portfolio. So a high net worth retirement portfolio, we'll call it $1 million or more in investable assets, right?
Yep.
So is crypto an growth asset? Would you call it an alternative asset, or is it a more of a legacy asset? Meaning, is it something? Maybe a legacy asset could be a home on the lake. It's passed from generation to generation, right?
Yeah.
Alternative asset is private equity, oil, cows,
right?
Right.
Yep.
And then a growth asset would just be speculative.
Yeah, certainly growth. You can make it, if you squint, you may be able to view it as alternative as well, depending on how far down the crypto rabbit hole you get.
Yeah.
I think, if you're just doing Bitcoin and Ethereum, probably just growth, not as much alternative, but there's other cryptos that, may be more specialized, that you may have expertise in that field and they're trying to solve that problem and you feel like, you found a gem.
Yeah.
You want to hold on to it, but certainly not legacy. But it kind of fits in those other two buckets depending on how you look at it.
Okay. So you think about, position sizing.
Mm-hmm. I should ask you this question because, for me, I probably overweighted on the vast majority of the scale for crypto, right? From a personal holding standpoint. But when you mix it into client portfolios these days, what are your low single digit percentages?
I just don't think that I think that people who do it individually with no guidance,
Yes.
who get really convicted of something,
Mm-hmm.
have way too much.
They skew younger.
Yep.
Yep.
And then the people like myself that think about risk
Mm-hmm.
and this could work out to be really big, but I also don't want to lose my firm over it.
Sure.
or obviously worse is derailing a client's portfolio.
Right.
So I think that something of a professional advice is somewhere in that 2 to 4% allocation.
That makes sense.
And actually Andrew tells us that too, because when he looks at the volatility
Right.
of almost any crypto,
Sure. Or the whole asset class period.
yeah, the whole asset, right.
Yeah.
If you look at the volatility, when you get above 4%, it's kind of a law of diminishing returns, right? It just doesn't. It adds to the overall rate of return of the portfolio, but it's so far in a positive manner.
Right.
But that volatility starts hurting you above 4%.
Yeah. And we're in a period of crypto right now that isn't fun to talk about the pricing.
Yeah.
As this last week was what I would consider volatility in crypto. It's all about where your perspective is. I have friends that will text me like, "Oh, crypto's down today," and it's down 2 or 3, 4 or 5%. I'm like, whatever. It's just a normal day in crypto.
Right.
But my spidey senses go off when volatility hits and we see an up or down day more than 10%. Like that's volatility.
Yeah.
And I kind of think about it if you compare it
Sometimes
to
in the opposite direction of the market, though.
Oh, absolutely.
That's where
Crypto's
people-
been all over the
And
place.
that's where
lately.
people can't they're like, wait, the crypto's down 10% today, but the market was up 3%. So
Right.
how is this happening?
So like I kind of think about like, an above average day in a stock market is probably a plus 1% day, right? Like
Yeah.
crypto, if it kind of a 10x multiplier for me, at least in my mind, that's what triggers it for me. But I, in some sense, have become numb to the volatility because just have that long-term perspective and helps you ride through. So it could be a very emotional ride.
Oh yeah. I've told
yeah.
our clients when we started this journey that this is a 10-year investment
Mhm.
and we're 1 year into it.
Yeah, I mean, if
So-
you're taking a 1 year view at it only, it's been a rough year.
Yeah.
Because a year ago, we're coming up on it, but Bitcoin was roughly 125,000.
Right.
And this last week, it fell to 60. So
Yeah.
it's down 50% in a year.
Yeah.
That's not fun.
No. No. No, it is a different than traditional retirement assets. If you buy crypto by itself, there's no requirement of distribution. Although if it's inside an IRA, you still have the RMD. That's
Right, because IRA.
yeah, because that's related to the IRA, not the crypto. Currently, there's no step up in cost basis if you pass away.
Mm.
So if you die and you own Coke stock and you paid 10 cents for it and now it's worth $1, your heirs would get it at a cost basis of $1. Where
Mhm.
crypto will stick to the basis.
Yeah. And I would imagine crypto starts aligning with traditional rules as we get regulations. And I've beat this regulation drum
Yeah.
to death.
Yeah. And we might be close.
And we seemingly are getting closer. The ag committee has passed their part. The banking committees literally has, I think, a meeting as we are recording this at the White House, meeting number 2 with all the different people at the table, but largely the banking coalition there about a stablecoin interests. But we won't get sidetracked on that. But at the end of the day, I think once we get this Clarity Act through, then you might start seeing guidance from the IRS on how they deal with taxes, or Congress can kind of set the rules. But I don't believe that's part of this Clarity Act at this point. So.
Also, crypto could have some custody or access risk. I think there's less of that now. You can buy crypto in an ETF, which is pretty buttoned up.
Right.
But prior, people have their own wallets. They can get stolen or lost passwords or bad actors.
If you're doing the custody yourself, there is definitely higher risk.
Yeah. And there are some scams out there. We had a podcast recently about the custody scams, but they're trying to use crypto. They're going to invest in crypto and they take your money, and probably no money's actually being invested in crypto.
Right.
So you want to invest through reputable sources.
You definitely hear these waves of people getting sent a link in an email to update the software that is their wallet, and it's compromised. And it's a very targeted attack. And it's sad to hear because, at least admittedly lately, it's been, the people that are on YouTube, the people that are on Twitter that are positively talking about crypto and trying to educate, and they kind of get swept up in a phishing scam, and they wake up the next day and their crypto's gone.
Doesn't happen in the ETF.
Correct. ETFs are not quite as exciting. You can't like hold and touch them, but
Right.
they definitely solve that problem. So
I don't know. When do you think crypto shouldn't be in a retirement plan?
I know we said we were assuming it's $1 million portfolio, but if it's less than $1 million and you're near retirement, it's probably the wrong asset to have in there,
Yeah.
just due to the downside risk.
I would say when your allocation has to be super conservative because of your appetite for risk.
Right.
So if you're in a 40% stock portfolio, 60% bonds,
correct.
You probably don't need to have any crypto inside of your portfolio.
Yeah. But outside of that, I think crypto used to be very political. I think it's becoming less and less of that. So that probably is not a factor here.
Yeah.
But yeah, it's to me, it should be part of portfolios, but you understand the lens it's coming through when I say that. So.
Yeah, I mean, as the president of Teton Crypto Capital, everybody should have crypto in their portfolio, right?
Well,
but as a person who doesn't have a dog in the fight, so to speak, I think that it's an asset class that should be in everyone's portfolio in a small dosage because this is the future,
right?
And I don't know if it'll happen in my generation. I hope it doesn't, but I don't know that the U.S. dollar is something that I want to put 100% of my faith in 20 years from now when all this debt comes due.
Correct.
So having a Bitcoin, something that doesn't duplicate, right? It is a finite number, makes sense to me in a small percentage as we see how all this plays out.
That starts getting down the political rabbit hole a little bit around the dollar, and I actually feel like it's a valid point.
I guess maybe political overall, but both parties have equally contributed to this debt problem.
Yes.
So,
and they both point fingers.
Right. Yes. They pointed at each other, but Republican, Democrats, and independents have all contributed to the debt issue.
Yeah. I mean, we have it good in America largely because the dollar is the reserve currency
of the world.
Of the world. And
we can manipulate it ourselves.
Correct. And we make a lot of times other countries pay the price for us inflating our dollar.
Right.
Which is just, in a lot of ways, is, in my opinion, immoral, but it is what it is. But the challenge with it, I think, is you start to layer on stablecoins these days, and stablecoins are huge buyers of treasuries and
short-term
treasuries that, in some ways, they're propping up the problem they're trying to solve.
Yeah.
Or crypto is trying to solve, not necessarily stablecoins, but it's we'll be interested to see it play out in the next, 3 to 5 years. So.
Thinking about investments, we have to think about taxes. Those kind of go hand in hand, which is why we do tax planning here at our firm and not just manage investments. So we think about crypto. How is crypto taxed?
Short and long-term capital gains. I mean, it's no different than stocks at this point.
Yep.
And there was one loophole that was closed around taxes with crypto a year ago with the passing of, I believe, the Big Beautiful Bill, where with stocks, if you want to tax loss harvest, you can't rebuy that same asset for 30, 31 days, whatever the threshold is. In crypto, all you had to do is buy and sell it in a second, and you could capture it. That is gone. I was kind of bummed personally. That was nice to be able to come and do that.
Right.
But it also showed me that crypto was growing up a little bit, and they were trying to clean up the rules around it. So
yeah. So really, the tax strategy isn't much different than any other investment. You want to harvest gains in your lower income years.
Correct.
Right? Social Security, pensions, and RMDs are all things that go toward your income. So you have to coordinate your crypto sales with all of those.
I mean, and if crypto goes how we're kind of insinuating we think it might go, you might have larger percentage gains in crypto than you might have elsewhere in your portfolio. So you might have higher tax bill effectively coming from crypto. You just have to kind of think through that. So.
And also, just like any other investment, you have to think about IRMAA thresholds. So the more money you make in retirement, the higher they'll charge you for Medicare. Right now, I think it's around $209,000 a year before you go into the higher threshold.
Got it.
But if you your capital gains counts towards that. So you have to make sure that any moves you're making don't affect that, because with IRMAA, they look back 2 years.
Got it.
So if you had higher income 1 year, for the next 2 years, you could be paying double what you're.
Interesting.
So it goes $185 a month all the way up to over $500 a month for the same service, depending on your income level. So
thank you very much.
Yes. Yeah. So you have to think about that. What do you think some common tax mistakes high net worth individuals are making with crypto? Have you seen anything that was like,
Well, for the longest time, the mistakes I saw people, and whether they're a high net worth or not, I'm not certain of, is just people like thought, oh, well, crypto, I can hide my cryptos. I can hide these, so I don't need to pay the tax on these gains, which is just straight dumb. And definitely saw not tons of stories, but stories where people like getting audited, then good luck.
Yeah.
Because you're going to pay, or you're going to pay either with time in jail, or you're going to pay
Right.
in the pocketbook,
Right.
or both.
Exactly.
But I think that if people are doing their crypto kind of the vanilla way these days, so doing it through an ETF, taxes are easy.
Yeah.
You start getting into more exotic crypto products, and taxes are still an absolute pain because there could be a million transactions.
And there's no 1099 issued by anybody. You have to go figure it out yourself.
I mean, if you stay all within, say, Coinbase's walled garden, they can issue a 1099. But you start moving crypto around, doing stuff on DeFi, so it's kind of on the blockchain. And again, this is where the Clarity Act, I think, is going to help in some cases.
Yeah.
Like following basis is really tough, and there's software out that tries to do it, but it gets complex, and they can generate different tax, like a 1099 effectively for you that is crypto focused. There's I think it's 1099 DA, I think is the form.
Yeah.
And kind of help with that. But generally taxes are a non-event these days.
Before we jump back into the episode, do you know if you are ready to take off and launch into retirement? Get your pre-retirement checklist, a free guide from Wiser Wealth Management. From cash flow to Social Security, we've got your countdown covered. Go to wiserinvestor.com/guides to download your free guide today. Now let's get back to the episode.
Let's kind of fast forward to a person who's retiring. How do you return crypto into retirement income? I don't know that you should really be thinking of it that way, honestly.
I think you have to think about it as your whole portfolio, right? I mean, like crypto is a part of that.
Yeah.
I think the challenge, and there may be this interim stage in crypto kind of leading up into this withdrawal topic, is like if crypto runs hard over the next 5 years, right, 10 years, like when are you rebalancing? Like that's not necessarily in our notes here, but I think that it becomes part of this as a portfolio manager, because you could have your 3% allocation could turn into, if you don't do anything, to turn into 15% or something like.
Yeah.
So it's a challenge that I think everyone would welcome to have the problem, but it will.
I mean, does it ever make sense to sell crypto versus you just hold it forever?
This could be a whole topic for podcast right here.
Well, I know, but that kind of goes into the legacy category of, so maybe it's some we just have and we build wealth with this. Or
I'm going to kind of put some boxes around my answer here. So if you're buying a crypto that is an ETF, I feel like you can hold it for the long term, and you're fine, because there's rules about how they can get listed as ETFs that kind of start to help separate.
Yeah.
And I don't know, there's not even a dozen different tokens that have ETFs at this point. So there's not like a large pool to choose from.
Right.
You start getting outside of that, and say you open a Coinbase account and you start buying stuff. There's 200 or 300 different tokens. In my opinion, I don't know, at least half of those I think go to zero long term.
Right.
Okay. Well, you're more gambling at that point, I would say, if you're buying stuff, because they're so far down the market cap rankings that like,
people are looking for the next Bitcoin.
Right. I mean, they're looking for a home run, a grand slam, a lottery ticket. You probably have better odds at the casino, quite honestly. So I think that you just have to be smart about where you're buying. And I think if you stay in things that you could buy through a brokerage account, kind of use that as your, I guess, limiting threshold there, I think you would be in a better spot to not have to think about selling long term and just kind of hold.
I think it's more of how you think about it. It's a tool. It's part of your portfolio. It should be on the growth side of your portfolio, and you trim it. So if it's at 4%, it grows to 10%, then you need to trim it back to 4.
Right.
Or if it's at 4 and it falls to 2, you would add 2% more to get it back to 4.
Right.
I think it's more. It's a tool. I obviously for the people who have maybe 50% of net worth in these things, then that's you need to have some type of a sell strategy.
Yeah. And the people that have such a high percentage of their net worth in crypto are so like vulnerable, I think, to the idea of it running hard and all of a sudden they see their net worth balloon.
Yeah.
And that's where the mentality of, oh my gosh, I'm not selling because it's going to go another, it's going to 3x from here.
It's no different than people buy individual stock and they come into our firm and they've held the stock for X, Y, Z time. And, you know, and it's just like, they got in, but they don't know when to get out, I guess.
Correct.
I would just say that you have to set volatility parameters.
Yes.
But more importantly, you need to have probably 2 years of lifestyle reserve built in if you're going to be crypto heavy. So you need to have cash.
Well, yeah, 2 years for sure. I mean, because, you know, there's always been this 4-year cycle. And I think we've talked about it a few times on the podcast.
Yeah.
The question is it still holding or is it changing now that we're in this new phase of crypto?
Right. So far, it seems to be holding.
Depending on how you squint to look at it.
In 1 week.
In 1 week, yes. So we'll see how the next couple months go. And I think that will kind of answer it because I think what we're starting to see is the 4-year cycle, if anything is elongating or kind of functionally goes away and you don't have the extreme highs or the extreme lows.
Yeah.
In the, I guess, again, the maybe the assets that are ETFs, for instance, kind of like that band of assets. So
I think from my lens, we're thinking like Ethereum and Bitcoin and Solana, those are all ETFs you can buy.
Correct.
But if someone is doing this on their own inside a Coinbase account, as you mentioned earlier, it falls into no different than picking individual stocks where you have emotional traps when trying to sell your winners. Mm-hmm. You say, oh my gosh, I've made this much here. It could go higher and I want to sell it. And you kind of have to have a game plan. It could be as simple as I have 4 coins that I've chosen and it's 25% allocation. And then I'm going to rebalance this every so often,
I think the difference I would kind of paint there between somebody's stock picking versus somebody crypto picking is stocks. There's a ton of regulations around what those companies can and can't do and how they can and can't talk and do things. They the quiet periods and all the things.
Manipulate.
Reporting. Yeah. None of that exists for crypto.
Yeah.
So
that's true. You have a lot of manipulation.
You have a lot of
cryptos.
Well, and at the end of the day, like there's no policing organization because they're global too.
Yeah.
Just because it's listed on Coinbase doesn't mean that it's like some like ordained safe, right?
Right.
Coinbase has got their rules and they've loosened them over time in Italy to get more things listed.
Yeah.
So the challenge is picking the right thing. So I would never suggest anyone buy something that's outside the top 100 market cap coins. I mean, there's thousands of these things. I think you start getting that far down the market cap list and the risk is incredibly high.
Yeah.
You have to really know what you're doing.
So if you have an ETF inside your portfolio of crypto, it easily transfers to the next generation, just like anything else in your portfolio.
Right.
Assuming that you have a revocable living trust set up or a will, even if it goes through the probate process with no will in place, it'll all be fine.
Yes.
Right. But the problem lies with these private wallets and private investments, or even maybe a Coinbase account that doesn't have a login, right?
Correct. I mean, I think that you can designate.
You designate Coinbase a person, but if you didn't designate a person, you could have a problem. So that creates some estate planning challenges that I think are unique to crypto, where that you need to make sure that there's access to those coins.
Mm-hmm. I often hear people talk about like the estate and like legacy or the passing down of crypto assets, much like people that were gold bugs that would hide gold in their house and their family members wouldn't know about it and they'd find it when they're doing the estate sale. Right. At least they could find it. Crypto, you're just not going to, I mean, unless you find the password written down somewhere, to your point, it is gone.
Yeah.
It's on the blockchain, but like functionally gone to the family. So,
right. There's been big stories in the past of people having lost it. One guy threw away a password and he was offering millions of dollars to sort through it at the dump. And
he recently gave up. He spent like $15 million digging. He's in the UK.
Oh, wow.
He raised money. I think it was 15 million or 50 there. But at the end of the day, he recently gave up and called it off because the Bitcoin that's on that hard drive or whatever it is that was in the dump, I want to say it's like $300 million at this point.
That's crazy.
So risk reward.
That's crazy.
That wasn't necessarily like a legacy handing down. He was purely like when Bitcoin wasn't worth anything, threw it away, didn't think much of it. And all of a sudden, one day, dawned on them, there's some Bitcoin.
So yeah, it wasn't just sent to the dump. It'd been in the dump for a long time.
Right.
Yeah, that's why you didn't find it.
Yep.
Interesting. So you think about lost assets like his, lost, that's money that can't go to the next generation. As far as gifting strategies, I don't know that, it's any different than anything else that we could talk about.
Yep.
If you have Bitcoin or any of these coins, you can gift that into a donor advised fund, just like you could Coca-Cola stock.
Yep. You
could use a trust to gift it. You still have the lifetime exemption of right now it's $15 million per spouse. That crypto is subject to that limitation. There's really no difference there.
Yep.
I think the important thing is if you have it outside a traditional platform, that's where you're going to have a third party, I think, should be storing that information for you.
Yep. And you're starting to see, I wouldn't call them startups, but these businesses pop up that are trying to help with that legacy piece.
Yeah.
Specifically for, holders of the self-custody.
Yep.
So,
and not just that, but also probably all the other passwords that we probably should be handing
Our
to
digital
somebody.
lives are rather complex. Yes.
Yeah, exactly. Which is why you should be using something like a 1Password or a LastPass.
Yes, a password manager. Yes.
And have a password manager, and you have one password to get into the password. It's like the book written down in your house as all the stuff written down with the same password used over and over again until they made you add an exclamation point, and then eventually they made you add another exclamation point. So you added another there, but it's just like that, except it's digitized.
Yes.
And you should be using scrambled passwords that no one can remember.
Right.
But in fact, it's built into our browsers now. So Google can have it too.
Correct. Yes. Yes.
Better than your family losing it, I guess. Things like Google has it, but Apple has that built into their phones. What do they call it? Is it key something or something?
Keychain, I think.
Keychain. Yeah. So I would prefer to use a third party, like a 1Password or a LastPass. 1Password preferably, because it's separate from the browsers and the computer, and it's stored in separate clouds.
And they generally can store more than just passwords. They can store bank details. They can store. You can have a pretty good, collection of your digital life and financial life in there.
I think that the point from the legacy standpoint is really. Nothing really changes there just because it's crypto. All the traditional vehicles that we use in planning would still apply. Which kind of takes us to our next point: risk management and planning integration. I think that custody is getting better than when we first started doing our podcast, probably 5 years ago.
Right. Yeah.
In fact, we had a whole podcast on where to custody stuff. I think back in the day. Coinbase seems to be the number one go-to right now.
Yeah, I mean, it's certainly the biggest name brand in the U.S. to do that, and it kind of helps alleviate that as long as you're protecting your Coinbase account. Yeah, I think that's obviously they enforce that, but that I want to emphasize: just because you keep your coin on Coinbase doesn't mean that you can be lax with your password or your two-factor authentication.
Right.
Right. You have to do your part. So.
Yeah. True. We have. There's less rules around crypto, so you had to be careful and vigilant from that standpoint.
Yeah.
And I wouldn't necessarily, I'm sure people get this question when people are joining your fund. Most of the people in your fund actually know you, so that helps it. But it's like there are a lot of schemes out there.
Yeah, I mean, there's movies about fund managers running off with tokens, faking their deaths, all the different things.
Right.
But yes, there's ways to do custody when you get into these more complex, products like a fund, where, technically I don't even control all the assets from a custody perspective. We have custody provider, and we have to bring multiple keys together, multiple passwords together to make a transaction. So it kind of gives investors a peace of mind that I can't just become a bozo and run off with things easily, but also. It kind of protects me too. So if I lose it, there's kind of this way to if I lose my part of the key, there's a way for us to kind of bring it all back together. So kind of some redundancies built in there.
All right. So let's talk about some takeaways, closing thoughts. I think crypto could potentially require more planning. Depends on where it's held,
Correct.
what it is,
Yes.
right? I think that takes coordination in your planning between your financial advisor, the CPA from a tax perspective, and really the estate planning attorney from maybe having to document some of this potentially.
Yeah, I would say if you're self-custodying, the complexity is way higher. If you're not self-custodying or you're doing it through an ETF, it's no different than owning some Coca-Cola stock, right?
Right.
So yes.
Which is how, by the way, just to cut down on my phone calls, that's how we handle it all here at Wiser.
Correct. Yes.
We only use the ETFs.
That's
We don't use any third parties. So yes, it's all buttoned up very tightly.
Yeah. It takes risk off at Wiser. It takes risk off the clients. It's great for everybody. But yes, it's, I hope over time crypto gets to a spot where the vast majority being, 95+%, use some kind of regulated product that holds it.
Mm-hmm.
So custody isn't part of the conversation every time we talk about this stuff. Because, custody is important, super important, especially when it's self-custody, because you get it wrong, either you don't get to pass it down to the next generation, or you lose it yourself. The bad scenarios are just all straight bad. Like there's no half bad scenario there.
Right.
So you just being diligent about with your planning. If you're doing self-custody, some of the ways to kind of help mitigate you yourself losing it. Yeah, you use password manager, but the backup for those wallets, you can keep on a piece of paper, for instance, with an estate attorney, or safe deposit box. There's ways to kind of push or lessen the risk because you're diversifying kind of the storage of the backup. So
yeah, and I think from an investment standpoint, crypto, it doesn't make things more complicated if you're using the ETFs in a normal traditional manner. It could create more complexity, like I said, if you held it outside of your portfolio, normal portfolios. Well, thank you, Robert. If you guys want to learn more about Teton Crypto Capital, we've linked them directly into our podcast notes here. If you have a minute, we'd really appreciate if you go on and leave us a review for this podcast, wherever you're listening. That helps us in our rankings in podcast world. But thanks for listening to today's episode with our guest, Robert Swarthout. If you'd like to meet with one of our Wiser Wealth's fiduciary financial advisors to talk about crypto, or even to start your own financial planning, you can do so by going to wiserinvestor.com. Thanks, guys. We'll see you next week.